Hello and welcome to this weekly GoNoGo show here on Stock Charts TV. It is Thursday, July 13th. Joining me today, as always, Alex Cole. How are you, my friend?
Very well, thanks.
Excellent. It's approaching 90 upstate New York, but the other thing that's heating up are the markets. Let's take a look at the cross-asset heat map just to get a sense of the trends across the asset classes.
Yeah, I mean, as you said, really heating up this week. What's been fun, I think, for many investors who are mostly equity focused is that we've seen a real nice move this week that's broken above some recent highs in the equity space. So this top panel really shows that with the stronger blue go bars coming in over the last couple of days. Treasury bond prices are in a no-go but weakening, and we'll see how that's playing out with rates prices later. We've got commodities in a strong go trend, and the dollar, of course, having a sharp fall this week, which we were noting this uncertainty at the end of last week. This week, fallen quickly into a no-go trend.
Absolutely. Obviously, a lot of discussion about the CPI report this week, coming in below expectations, cooling inflation, a lot of speculation about what the Fed will do next. And as our good friend Jim Bianco, also a CMT charter holder, continues to share with folks, is that that narrative of expecting the Fed to stop hikes, to reverse course, that's been a pretty constant stream for a couple of years now, and the Fed has been very determined to fight inflation. But what we're seeing in the markets is certainly some positive risk on behavior in reaction to that cooling inflation number. Let's take a look across the asset classes, Alex. Let's dive into the TNX, the 10-year Treasury yield. Certainly a good place to spot the reaction from this week's news. I see you've got the downward sloping trend channel, looking at what we had been anticipating in the next leg higher, move out of that trend channel last week. Certainly looks like a pretty sharp correction back into this range-bound space.
Yeah, and we'll see this movement on the daily chart in a second, but this sort of slowly meandering trend lower, everybody was sort of a bit concerned that we might be breaking out and going higher, but you can see how we quickly fell back lower this week. And that's obviously good news, perhaps, for equities as rates stay elevated but aren't rising too fast. You can see that there is some positive momentum with the oscillator above zero. So we'll want to see price come back and sort of stay in this channel over the next couple of weeks or so if we're going to look for that continued movement lower. Still a go trend, but certainly not the breakout that everybody thought might be coming this week. If we take this down to the daily chart, we can get rid of this trend channel. You can see how sort of quickly we moved lower, and you can see that we really fell right from these March highs. You can see we just about hit it, fell away very, very sharply. So there's definitely some resistance to rates going higher.
You know, spending a lot of time with the legends of technical analysis, founders of the CMT Association, and folks who have made it their practice through their career doing a lot of classical technical work. For them, one of the most important signals is when a move doesn't resolve the way it's expected. So that breakout of the downward sloping trend channel, the reverse back is almost a more important signal for classical technicians than that original break. As they say, from failed moves come fast moves. Yeah. We've certainly seen Treasury rates peel back quite a bit of those recent gains here in the last couple of days.
Yeah.
Let's move on to the chart of the U.S. dollar, Alex. And I know we've had a lot of analysts hoping for that correction and losing a little bit of that territory just in the last few days. A strong move to the downside. Certainly my eye is immediately caught by the GoNoGo oscillator in that lower panel, reaching oversold extremes in just a few days, having another failed move, that breakout of the GoNoGo max squeeze, and then quickly reversing to the downside.
Yeah, I mean, similar to what we were seeing on the rates chart, the same high back in March being tested and then failing at that level. But we can see how we're a little bit more advanced here. We've quickly moved into a no-go trend, really sharp fall on the dollar. We've moved so quickly, we're almost testing these lows. So we'll see what happens here. Like you said, very, very oversold. That's the most extreme reading of -6. So we'll see whether there's any kind of counter-trend correction coming off the back of this sharp move, or if we'll really see these lows threatened.
Absolutely. Let's take a look at what has often been a contra indicator. Let's move over to gold and take a look at what that recent rise has meant from a trend perspective, even on a daily, not yet changing any kind of trend conditions.
Yeah, it's interesting, Gold, because we've seen this sort of movement against what we're seeing in the dollar and in rates. You can see how we've jumped higher these last couple of days, and we've got positive momentum. However, what we will say is that we are still below areas that were first support and then resistance. So we'll want to see if we can get above these levels for us to be sort of seriously considering a move to a new trend in gold. But certainly some weakness this week and some positive momentum.
Absolutely. Let's take a look at the energy space, starting with U.S. oil. We've seen some interesting range-bound activity for many weeks now, and on the weekly chart, we're back into a neutral bar as we approach the top end of that trend channel. Alex, talk to us a little bit about what we could expect for resistance here.
Yeah, I mean, I've been saying for weeks now, nothing to report on oil, but this time may be something changing. The last time we saw amber bars, we saw that they were really in that transitionary period between the last go trend into this no-go correction. Also, we can see that we're breaking out of a max go-no-go squeeze as we paint an amber bar that tests the upper bound of this downward sloping trend channel. So if we reverse against that resistance, come back into the middle of the trend channel, then that's where we still are. But if we can consolidate above these levels on continued positive momentum, we may see some movements higher for oil.
You know, that's it's such an important takeaway. With technical analysis, what we want to understand is the entire context of what we are trading in. So obviously, price is our most important indicator. We're still not seeing any break above that downward sloping trend channel. But when we start to look at investor behavior, right, that tug of war between buyers and sellers indicated by our momentum oscillator, we've had neutral momentum, a volatility squeeze to the max. That break to the upside and certainly seeing neutral trend conditions is something to pay attention to for sure.
Definitely.
Let's take a look at Nat Gas as my 9-year-old loves Megan Trainor talking all about that base. This looks like about a half a year here in a basing process. Talk to us a little bit about what you're seeing on the charts here, Alex.
Yeah, I mean, very narrow range too, Tyler. Ever since this low here from sort of February of 2023, that's provided some resistance at the top end of this basing pattern, and we've got the lower end down here. So not a lot of room here as we really meander sideways, but we are in a go trend. We've had some positive momentum. We've just seen this go-no-go squeeze build to its max. Looks like it's breaking to the downside though, so we may be stuck in that range for some time. If we can get back above positive territory, stay in go bars, that'll be constructive evidence that we may be able to set a new high. But at the moment, definitely looks like basing. And if you take this back out to the weekly chart, then you can really see how we're sort of forming that basing curve. What's interesting here is that you can see the divergence with the oscillator making higher lows, price making lower lows. Of course, that's a very classical way to use momentum to confirm or not confirm what you're seeing happening in price.
Absolutely. And as we know, basing is a process, doesn't happen overnight. So that's an excellent chart to keep an eye on, Alex. Thank you very much. Let's turn our eyes to the equity space. Let's start with the S&P 500 on a daily basis. We've seen a pretty clear break above that prior range, and we've consolidated and resolved higher. And we're seeing extreme overbought momentum, which is a nice confirmation of that move higher.
Yeah, I mean, what we love to see is these sort of classical patterns play out, and you can see quite easily here that we've got what looks like an ascending triangle in hopefully or potentially the middle of a trend, right? This could be a continuation pattern if you're reading it from a traditional classical sense. Now, trend in place, oscillator providing support at the zero line over and over and over again. And then we see that nice break this week where we gapped higher, and now we've moved above what was resistance. I mean, this was clear resistance because we definitely failed at it last week. So to see us break through that gap higher on positive momentum, seeing all of these trend continuation icons towards the right side of a pattern, we've talked about that before. That's a really positive sign for me. And overbought doesn't mean a bad thing, right? We know sometimes people get trained to think of overbought, oh, we should sell. Overbought means market enthusiasm. We've worked with plenty of people that buy overbought because of the positive nature of what that means. We would just want to be careful when that momentum cools. But right now, seeing strong momentum, that's just going along with a nice, strong movement in price.
Yeah, for folks who have gone back to the early writings of George Lane in the 1950s, thinking about stochastics, reaching overbought is a good thing. It's when you see the decline, the exhaustion of momentum on new highs, that could be a signal for an exhaustion of a trend. So, Alex, we talk a lot to our portfolio management clients. They're thinking about stylistically where they're going to be allocating capital within their portfolio. Why don't we pull up those 9 style boxes and just take a look at the mix of growth to value, blended, large cap, mid cap, and small cap. And what's really popping out here in the last couple of weeks is that major rotation and breadth expansion, meaning more styles, more participation in this uptrend up and down the cap scale. And really, it's just that top panel of large cap value that is on a relative basis underperforming a rising S&P 500. So for all of you who are watching, when we're looking at these relative strength heat maps, there may be absolute trends in large cap value to the upside, go trends. But when we're looking for outperformance, portfolio managers who want to beat their benchmark need to own the securities that are beating the benchmark. So here we've seen a massive broadening and expansion of the styles and sizes that are working. What really sticks out to you here, Alex?
Well, I mean, it was clear that for the longest time, it was just large cap growth that was contributing to any outperformance. This is the third panel from the bottom here. And you can see it's been in a go trend for this whole period that we're looking at. Then it was joined by large cap blend. And so you can see that was the second style that was outperforming for quite a significant amount of time. So if you realize that what you just said at the beginning, that it's really this top one only large cap value that's underperforming, you can then infer from that we've got the mid cap and the small cap coming into go trends for every style. So if you're looking at the second panel, that's mid cap value. The third panel, small cap value, both now in go trends. You jump down to the fifth and sixth, you've got mid cap blend, small cap blend, now in go trends. Same thing at the bottom, you've got mid cap growth and small cap growth now in go trends. So what was once dominated by large cap growth is now, as you said, we're really seeing an expansion by style and by market cap.
Absolutely. And as we look to allocations within the equity space, we also want to take a look by the sector groups. So let's take a look at our GoNoGo sector rel map, taking a look at each of the 11 spider sectors relative to the S&P 500. And I'm not sure if you can see behind me, but the sun has stopped shining. I think we're about to get a tornado up here. But let's go through this heat map real quick, talking about the relative outperformance of now cyclical sectors coming into play. And you remember over the last several weeks, all we saw were our growth equity sectors: information technology, communications, and discretionary. And it was the defensive sectors that rolled over first as we started to see the S&P come into that new go trend. Then our cyclical sectors rolled over, and now we're seeing those cyclical sectors come back into favor. Last week we were talking about industrials. Now we're seeing materials in a neutral territory relative to the rising S&P, and we're also seeing banks, financials, and energy in their neutral category right now. Here it is, Thursday coming into the close, but it'll be interesting to see how we end the week on this sector rel map as well.
All analysts and investors like to see broad participation in rising equity markets. Everybody gets a bit concerned when it's dominated by one area of the market, right? People want to see breadth. And that's really what we're seeing. We've got the growth sectors, they're still in go trends. And again, like really important point you mentioned before, Tyler, the tech space in this top panel showed some amber bars on a relative basis, but the go trend in technology is still nice and strong on a pure basis. So relative outperformance still in the growth sectors, but also some relative neutrality and outperformance coming in as you said, on this middle area of the chart: energy, financials, and industrials, as well as materials as well. So everybody will like to see more areas of the industry or the markets participating in a move.
Absolutely. Now, as the market is designed to frustrate as many investors as possible, we've watched this year with Silicon Valley Bank imploding. We've seen liquidity events. Let's take a look at the financial sector. Wouldn't it just be hilarious if financials enter this period of outperformance against the S&P 500? Why don't we take a look at it on an absolute basis first, just the XLF, as you've got it here on a daily.
Yeah, I mean, and this is the thing. You've got to be prepared to learn from, or so I guess I'm trying to remember. Sorry if I'm fumbling for my words here, but somebody told me you've got to be disciplined enough to stick to your process, but also brave enough to react when you are told to do so from what you're looking at. And I think that that's the key. You can't be scared away from financials forever because of what happened. You need to be strong enough to believe in the process. And when they come back, as they certainly have done, you've got to be ready to participate. And we certainly saw a go trend take place. We've broken above this level that was acting as resistance, oscillator in positive territory, finding support. And now, of course, we've broken higher again this week. So you don't want to have been afraid of this move because of the pain that we saw here with this no-go drop. You got to believe in the process and be ready to act.
And that is, that's the statement that David Lundgren makes time and time again on the CMT Association's podcast, Fill the Gap. The market is the greatest fundamental analyst on the planet. It will decide where outperformance should lie. And so if we can trust in the charts, it's going to save us a lot of speculation or a lot of behavioral impulses to maybe steer clear of financials. Nice to see the XLF coming back into go trend territory and consolidating above that resistance area. Yeah. Alex, let's dive into the industry subgroups of the financial sector and just take a look at where that outperformance is coming from.
Yeah.
As we were discussing this ahead of the show, the specialty financials group was one that stuck out as a more durable go trend, strengthening here this week into that strong go trend of relative outperformance to the sector XLF.
Yeah.
And within that specialty group, why don't we take a look at an individual name like S&P Global? SPGI is the ticker symbol. And what we find in specialty finance are analytics platforms, groups that are aiding the investment profession. And look at that go trend with consistent support at the zero line for the GoNoGo oscillator.
Yeah, and just beautiful to see, working as it should, coming into a go trend, support being found at the zero line, continued trend continuation icons. And this week again, break to new highs, multiple continuation icons towards the right side of this consolidation. And then the oscillator racing into positive territory. So very, very nice looking chart for S&P Global.
Absolutely. Let's take a look at another one of the most hated sectors, the energy, XLE. As we were looking at crude, Brent, nat gas, we're starting to see some of that basing. And here in the XLE on the equity side, we're seeing that go trend as well, approaching some overhead resistance though. Correct, Alex?
Yeah, we're seeing some strong blue bars though. We've got some positive oscillator movements. What's been nice here is that the oscillator broke into positive territory some time ago, found support, and is now adding some conviction to the move in price. We'll have to, like you said, deal with this overhead supply, but looking okay at the moment in the energy space.
And as we like to do that exercise, let's dive into the industry subgroups of this energy sector and take a look at what's pushing it higher on a relative basis.
Yep, there you go.
So we've got integrated oil in that top panel, TJUSOL, in the no-go, strong no-go trend conditions relative to the energy sector. But we're seeing outperformance from exploration and production, from equipment and services, from pipelines, and then some neutrality in the coal space, Alex. Yeah. That might be good for the planet if coal is in neutral territory, maybe not expanding quite so fast. But as we wrap up today's show, why don't we take a look at some equipment and services companies like Halliburton?
Yeah, definitely worth being in the space where you're seeing outperformance, like you always say, fish where the fish are. Some people say fish where the fishermen are. Perhaps you can get an even earlier start in the morning. But yeah, here you go, breaking to new highs. Certainly looking like a basing pattern oscillator moving into positive territory, finding support after it rode the zero line, as we saw that max go-no-go squeeze build, and now racing higher this week for Halliburton.
Absolutely. Alex, as always, it's a pleasure to talk markets, to go through these charts, to talk process and tools. For all of you who are watching here on the Stock Charts YouTube channel, you can also head over to the GoNoGo Charts YouTube channel and find even more content, some of our recent webinars and educational presentations. And we look forward to seeing you each week here on the GoNoGo show. Until next time, trade 'em well.